This video is Multiple Stochastics Part 2, and in this part we're going to be discussing the use of, again, more than one stochastic, but this time we're not going to be using the same data feed. Okay? We have on our chart a 6,000 ES tick bar, but a 100 bank. Now, many of you like to use bank. We think that it's got merit. Place a stochastic on both. And what do you find? By using a secondary data feed that is not an ES price-based data feed, you've got a separate kind of confirmation going on. The two are related. They move essentially in the same direction. They're not inversely related, such as the VIX. There's a direct relationship between the two. There's a good spread between the tick bar intervals here. Now, whether you're using 100 or 200, that of course is up to you. But let's just get the concept again across. Now, first thing we want you to keep in mind, and we failed to mention this in our previous video, when you are plotting the ES, always plot the overnight market. Don't just plot the day market. Your numbers are not going to be accurate if you're just plotting the day. Use the overnight market whenever you're using an indicator. So that having been said, here's the open. All right, there's the open. What do you see happening on the ES? Well, the stochastic on the ES is already headed down. We don't get our first turn on the stochastic until here. And quite nicely, stochastic is turning. All right, it's turning right in here. It's a little late. Okay, it's a little late. I'm going to grant you that as far as when both stochastics are turning. But bear in mind, we're updating the bars every 100 ticks. So you can't rely upon just the visual. Our point is, let's get the concept across. So we take a long trade in here. They're both turning. You can expect some sort of a pullback. Why? Because the bank is already overbought. And there is a bit of a pullback in here. All right? Now at about the point where we're turning again, bank is already turned, up you go. Now you look for the short up in here. This stochastic is turning, bank is already turned, down she goes. And you, I'm sure, can appreciate the rest. What we want to get across is that if you use a market internal indicator other than the ES itself, you have perhaps a bigger confirmation of what you can expect to occur. So what options do you have besides bank? We feel that the following data feeds can be useful, and you've gone over this in your other training. You can use the ADS-PD. You can use the tick. You can use the VIX. Let's put a tick chart up. So we've inserted the tick, $TIK, 50 tick bar with the stochastic. A couple of quick things. Keep in mind, it is not just a matter of the stochastics agreeing. There's also the issue of the zone. Now, if you want to use the zone, you've got to keep something in mind. For the most part, whatever zone you choose for one data stream is going to be the same zone that you're going to use for the next data stream. So if our zone is 2080 on the ES, it's 2080 on the tick. Now we'll show you how you can modify that in just a second, but just keep that in mind. So here's the idea. Here's the open, and basically we don't really have a buy opportunity based on zones of the tick until down here. But you're not going to have it up here. All right? So if you're looking to use the zones, you have no trade for a buy at any time in here. You only have an opportunity to sell. Okay? There's only an opportunity to sell. And that, of course, actually doesn't take place. All right? If you're using the zone again, look at the zones. Now these aren't going to line up exactly, but right in here, you're barely into the zone here. And not really. You wouldn't get a short trade here either. You wouldn't get one here. You wouldn't get here. You wouldn't get a trade is what we're saying if you're using the same zone in the same battery of strings. Okay? So what are we suggesting here? If you're going to use zones, let's go back to the strategy here for a minute. And we wanted to use the stochastic, we set up our zone. This will govern whatever we're using, which is down here. Okay? So if we have the ES here and we have the tick, we've got the same zone for both of these. That may not work very well. So if you want to use a different zone or no zone at all and just use the stochastic, here's how you have to do it. Just use one chart for your ES. In this case it was 6,000. Right? We don't have to worry about this because we're just telling the chart which ones we're going to use right in here. And we'll go down to our auxiliary. Okay. Here we set up the tick. Right? And then back up in here, set that to true, and now we can determine, well, what zone do we want to use? Or do we want to use any zone at all? If we don't want to use any zone, double quotations. If we do want to use a zone, you're going to need to somewhat optimize this just by looking at the chart historically, get an idea as to where about you need to have that zone. Now in this case, the tick probably would need to have a zone closer to about, pardon me, $30.70. All right, gotta have quotations in there because this is a string. All right. Now, if you don't use a secondary zone, that's how you set it up. Okay. Now review that later if you need to. Now, one last thing. Let's take a look at the VIX. 7-tick VIX. VIX is inverse to the Spoos. Primarily short trades in here. VIX is down here, ready to move up. Okay? As it turns, here's your short trade. You're not long on the VIX until we're up in the zone here. So right in here, possible long trade. Possible long trade. Again, down in here. Right in there. Long trade. Now, confirming short trade right in here. Okay, still within the zone. So you can set up the VIX zone quite nicely in conjunction with the ES. Just another approach. Don't get too complicated with this. This is a nice approach using other market internals. Thank you.